Hello, it's Wednesday the 30th. I'm FxPlew, and with growth forecasts, trade tiffs and a bit of a wobbly pound, there's plenty to unpack in today's market brief. So the IMF's been on. Despite all Trump's trade policy curveballs, they boosted global growth forecasts to 3% this year and 3.1% next year. For the UK, they stuck to their guns from last time, steady as she goes, with 1.2% growth for this year and 1.4% for next year. But they do think the Bank of England should cut rates twice more this year. Cheaper borrowing could give the economy a much needed boost. Of course, we had all the standard caveats about Trump's tariffs and rising debt levels, warning that uncertainty remains the current name of the game. Reeves chose to ignore any inferred criticism of her policies. She cherry-picked where the UK is the fastest growing G7 economy in Europe as something to celebrate. Classic Reeves. Over in the US, the Fed meeting is expected to see a vote for no change today. Powell continues to stand firm, shrugging off Trump's tantrums or the threats to sack him. The chance of a rate cut in September is growing, but for now, with inflation way off the 2% target, the Fed is expected to keep rates higher for longer. Reacting to the EU trade deal, the French PM called it a dark day, while the German Chancellor grumbled about the hit to Germany's exports, but he did admit it could have been worse. Spain probably deserves an honourable mention. 2.8% year-on-year growth is leaving Germany, France and Italy all in the dust. Olé. In the market, sterling took a tumble yesterday. Cable dropped to 133.10. The euro also lost ground, falling to 115.40 after the trade deal. But we kick off this morning. We're around 133.60 against the dollar, 115.60 against the euro, and euro dollar is also 115.60 on the open this morning. That's it from me. Toodaloo.
If you do not have a clue, then just tweet through and ask FxPlew.